Good afternoon, everyone. How are you? Thank you for tuning in again with us. This time, it's going to be another episode of Roundtable. It's a special edition. I have a trivia for you. Did you know that Ukraine is the food basket of Europe and that Russia not only exports oil but also supplies crucial metal used in semiconductors called the palladium? Still shocked from how we are still in a pandemic when the Ukraine and Russia conflict started affected our gas prices. Well, worry no more about the trends that was and trends that will still may come to be. Our coaches today are here to tell you that the market's volatility is actually part of the stock market spectrum. If no one escapes it, then what is the best way to deal with it? This is the main reason why we have market coaches today to share with you their experiences in dealing with such uncertainties over decades and years that they have been in the industry. I was once told I once told you that you'll be able to respect the market when you experience these things. So, can I see comments below? Hashtag roundtable na here at wherever you're watching us from. So if you're watching from whatever part of the country or whatever part of the globe, tell us. Hashtag roundtable na here at tell me what's the place where you're watching us from. And also, please share this with your family members who are also worried about the market who would like to ask question. We're trying to see we have a lot of people who registered with us. We sent out the link. I don't know if they have received it or they have opened their email. Someone is saying from Randy Vasquez, watching from Baler. Daddy Yo watching from Batangas. So mga local ang ating viewers today. Hashtag roundtable na here at Baguio City. Hello, Minnie Mouse. Tell us. Okay. So before we gather, before we start, I'll be introducing our analysts in a different way. It's a way of telling you how long have they been in the market and probably have an idea of where are they in terms of experiencing these types of volatility. Ayan. May isa lang kaming main message na hindi kayo nag-iisa and we want to handhold you. So we are now about 69 audience here. Please call them and let's start. Okay, so far, you guys are not yet members of my trade or members of my trade. Can I see not yet if you just if you found the ad and you registered because you want to know what the coaches will tell you to this afternoon or someone just shared with you this link. Ayan. Hi, Miss Retailer. Yeah, ay, sige. All right. Kayo ba ay currently invested? Are you holding a stock? What is the main thing that worries you? Tell us in the comment section below. Wow, from Katrin Kate Marasigan watching from Rome. Sige, let's do this shout out. By the way, the most active participant later on, we are planning to give away 5 flip calendars and the table calendar. So if you are working in an industry where you need this big calendar, so we'll be sending it to you. Just let us know. Who are the Marge account holders here? Ayan. Can you comment Marge Believer? Just like John Kelvin de la Vega. Rainier Conrad Aspirin. Minnie Mouse has Marge account and regular account. All right, for those who doesn't know what a Marge account is, it's a concentrated portfolio for beginners. So what they do here is they are following the market in terms of a list that we send out, just like a playlist, for them to be able to choose what stock they want to buy on that particular month. Yan, March users Rainier, Aspirin, Randy. how to open Marge newbie here. All right, if you want to open an account, we will send in the comment section below. We will pin the registration dashboard, so you can just click the part where it says Marge account and register. If you want to know the details of how to play, how it works, just click the link on the link that shows the screen of how it works. And Corino Bacaltos, Marge and regular account holders. So we are a mix of account holders of regular and Marge account holders. Okay, sige. Alright, kasi I don't want to start not unless we are at least 100 na, because sayang yung magiging inputs and sharing insights ng mga coaches natin this afternoon. And we're also waiting for the two more coaches at the backstage. Tiwala lang kay Marge with Shortix and Navigator. So, gusto ko malaman, what did you feel when you saw in the news that there is a war going on Ukraine and Russia? What was the first thing that concerned you? Sige nga, mag-usap tayo. Tell us your tell us your sentiments. We want to hear your sentiment. Hi, Herschel. Good morning from Israel. Thank you for watching. Good afternoon, Sir Zaldi. Right, thank you. Daddy Yo official page, hashtag March Believer, hashtag Sir Nicky Believer, Pioneer holder here, just enjoying the ride. We're in a marathon. Ayan. Nakinig yan ng last year's outlook from Ronald Davila. Sobrang volatile ng market. I know, yeah, di ba? Parang one moment nasa resistance, one moment nasa support. Titignan natin kung ano yung range mamaya. We have asked the opinion of one of our coaches, and he will give his take on the market's index later on. Sabi ni Minnie Mouse, bodega mode habang may BP. Ayan. So from John Kevin, market would go down again, which is, di ba yung sinasabi natin, market is cyclical. So regardless of where you started, there will be ups and downs. And what connects the ups and downs or the cycles of the market is our emotion. And we want to make sure that, if we know that this is a cycle and this is a season, it's gonna be we will be able to manage it better than, makikita na natin reactive lang tayo sa market. So let's see. Okay, so I think so far may chance mag-bargain hunt. Yan. So others, sabi nga nila, if there is a catastrophe or something's not going right, there is always an opportunity. So it's a matter of perspective. I know emotion is always there, and we cannot, it's hard to manage your emotion. Tayo yung mga tao lamang. And that's why we ask people your sentiment, so we can hear you. We know, we can understand where can we give an advice in terms of the sentiments that you have in the market. From John Kevin de la Vega, hashtag sana all, may pang bodega, Miss Minnie Mouse. Ayan. So it's also important that you have this regular or frequency wherein you add funds to your account. Kasi it's one way of parang nagre-replenish ka of your seeds, di ba? These are your seeds for the future. So parang mga seeds, hindi lahat nagiging puno. Kaya dapat meron tayong pangpunla every month or every whatever it is that you think is a proper way of putting funds in. Dapat hindi kayo titigil. It's a matter of prioritizing your future. Ito yung binibigay mo sa future mo. Ayan. April Sigaya, March user here. Ayan. So we are trying to find out, are you guys a regular account holder? Are you guys a March account holder or not yet My Trade subscriber? Yan. For those naman na hindi alam what regular account is and the difference of regular and March account. March account is concentrated. So yun lang nasa playlist, yun lang yung pwedeng bilhin ng inyong portfolio. So if you want to explore in others strategy wherein you can avail of the IPOs, the different corporate action, you can avail the regular account. So if you are a holder of March account and nakita mo may mga opportunities pala like IPOs and stuff like that, you can always open a regular account. There's no limit in opening an account. You can also open for your kids. Like if you're planning to if you gave birth, you can open a trust for account for them. This is actually the high time to, plant them. At malalaman natin mamaya what's the take of our coaches and our market mentors with regards to the market like this. And yan, regular account, sabi na Aura. Ayan, so we are around 105. We're still expecting more. And we'll probably add siguro for those who are waiting sa channel, we can put this on public. Anyway, we will be rewarding also those who registered Samflip calendars and table calendars to say thanks to those who registered. And we want to give you ayan, okay na. We want to give you something later on, yung link siguro so you can watch this especially those who are in a different time zone. And for those who waited and woke up early in the morning, like the one from Israel, the one in Rome, thank you so much for tuning in kahit na iba yung time difference. All right, so we can start now. And I want to introduce them one by one. But I think the other one is still in a briefing. So mamaya na lang natin siya introduce. But hindi ko na patatagalan, no? I'll introduce the mentors one by one. First is, dun muna sa pinakabata. Since yung bunso is wala pa, I'll introduce you to the second one, the second bunso. Which sinimulan niya yung mag-trade around 2016. So he has been trading the Philippine stock since 2016 and is currently covering industries like power and other. Ask na lang natin kung ano-ano yung kino-cover niya. So let's say hi to Herman. Hi, Herman.
Hi, China. Hi,
Hello.
everyone. Good
Can
afternoon.
you tell us, Herman, ano-ano yung mga kino-cover mo na stocks?
So I cover telco, property, power, and construction.
Ayan. So, anong year ka? 2016, no?
2016,
The market.
yes.
So, siya ang representative ng ating mga audience na nandito ngayon who started at around that time. So, next is, okay, in no particular order in terms of age, but she has been in the market for I think as an analyst for more than a decade and is currently covering banks. And the only rose among the thorns, she is a senior analyst of also a senior analyst for the research team. Let me call on Bess. Hi, Bess.
Hi, good afternoon.
Good
Hi, China.
afternoon.
Hi, Herman.
So, Bess, apart from banks, what do you cover? What else do you cover?
Banks and economy and indices.
Yan.
And some of the other some of the holding companies, but not all.
And Bess, can you tell us, ano ka ba? Passive investor ka ba? Are you,
I
what
think
type
I'm
of investor are you?
medyo mixed. Medyo nag-cut off yung feed kanina. I'm not sure what you said about how long I've been in the market, but I started very relatively late compared to how long I've been with Abacus, no? Kasi hinintay ko syempre magkaroon ng online Abacus. Tax. Joke lang. Pero yes, medyo 2017 ako nag-start mag-trade. So before that, I was mostly a passive investor, mostly in mutual funds. And then syempre nung nagkaroon na ng online si Abacus, doon ako nag-start mag-dabble into or mag-try mag-trading. So I'm a mix.
It's good that you. Ayan. So si Bess is mixed when it comes to investing. And next is okay. Our technical analyst has been has been trading since 2007, I think, if I'm not mistaken, and has been focused on price action. Let's welcome Isaiah. Hello, Isaiah.
Hello, good afternoon, everyone.
So tell them what's the difference of what you cover, the stocks that you cover, and what Lawrence is covering for the sake of the audience.
There's mga top 15 market cap, so anything below that siguro is per game to cover, to chart. Sa map.
All right. So yung mga wala, so since Sir Lawrence is actually not here in the Philippines, but he recorded some of the questions that I sent to him, and later on we will also share it with the group. But if you are gonna ask technical questions with regards anything in the stock, let Isaiah do that for you for the meantime. All right. Okay. Next is okay na. Yung next na ay yung ano natin, the Michael Jordan of my trade. Lagot ako dito. Has been guiding people since 2002 and is the face behind the Abacus Fix since that time. No other than Sir Nicky Franco. Hi, Sir Nicky.
Good afternoon, everyone. Nakakahiya naman kay Michael Jordan.
Sir, ganun ka namin tignan ko naman.
By,
At nawala.
kung sa tagal ko
Sir?
sa market, retired na si Michael Jordan.
Pero sir, for the benefit of the audience, what year did you start, considering investing in general? Kahit hindi stocks.
When I started, when I started with Abacus lang talaga. So that was in the previous century. Ay, previous millennium pa pala. Previous millennium.
Ayan, yung previous, yung 2002, tama ba, sir?
Hindi.
Ano ba? Ay hindi.
Previous
Nagsimula
millennium.
Ay,
1990s pa.
1995? Yung panahon ng Backstreet Boys? Eh, sige, mag-pretend tayo na hindi alam niyo, sir, yung Backstreet Boys. Okay, last but definitely not the least, yan. So, see, he has been in the market more than I've lived in the planet. Joke lang, sir. Sorry na, sir. I just want to emphasize how far you have been in this market and how more, he has been here for more than 3 decades. It's all welcome, Sir Paul Su. Hi, Sir Paul.
I want to say I'm the youngest, but nobody believes that anyway. I've started trading stocks on a personal basis when I was still working in a bank, so that was like, I don't know, 40, 45 years ago. So that's older than any one of you, So I've seen how the market evolved from the manual way to our present automated system and the kind of improvement this has done. So, but as we all say, you keep learning about the market. There's no such thing as I've learned enough, 5 years, 10 years. But what's important is understanding when do I understand the market. But when you feel that I understand the market, okay ka na, you can start trading. No, doesn't mean you make money all the time. I still lose money, and I still, make mistakes. But on the hindsight, you're able to analyze. So anyway, so that tells you today's roundtable is really trying to share whatever we have in terms of experience, and I don't claim to know more than anybody. That's why their job, the research team and all the technical analysts are in the company, because they provide the inputs not only to the customer but to people like myself who always want to know, what's the next move in the market and why is it gonna move. So, welcome to everybody, and we hope we can answer all of your questions, and that at the end of the session that you would have learned something from this roundtable. Thank you very much for joining us.
All right, so let's start off. The first question I have, guys, for the audience sake, so I'll be asking a question, and everyone will answer, and then from there you can take your questions in the comment section, so we can give them to our coaches this afternoon. All right. So, sir, mentors, coaches, on February 24, when the news broke about Ukraine and Russia and it was aired and the market opened at 7,355. From that, it went as low as 6,663 on March 15. What did you do, or what were the plans that you have in mind in between those dates and in terms of your own trading portfolio? Simulan natin kay Herman.
Okay. So, uh, ever since the tension was rising between Ukraine
Unmute yourself, Herman.
Yeah, sorry. Ever since the tension was rising between Ukraine and Russia around February, actually I was kind of panicking also at that time because I was not sure on where the market will head. So will head to. So actually, I decided to um, cut off some of my holdings, and then I tried to reallocate them to companies which I'm sure are not directly affected by the Ukraine crisis. So that's basically what I did during that time.
Oh, okay. So, isisingit ko lang just in our bunso in the analyst, is Rainier. I think he started trading since 2014. And fun fact, he is actually our My Trade client before he became an analyst. Okay, let's welcome. Hi, Rainier.
Hello, China. Hello, everyone. Good afternoon.
Natatakpan ka. Teka lang. Sorry naman. Ayan. Um, So we are in our first question, Rainier. I'm asking the coaches, I'm asking you guys, what did you do when you heard about the news about Ukraine and Russia, from the market that went down from 7,355 to 6,663 on March 15? What did you do in your own trading portfolio and how did you manage it?
Uh, I guess much of it, parang we were already seeing a spike in oil prices, a spike in commodity prices, even before tensions escalated between Russia and Ukraine. So during that time, Feb 24 night or Feb 25, around that time, fuel spiked even more. The commodities started to started to boom further. So parang even before that, no, we were already seeing some consumer stocks falling. So the likes of Monday, URC, and even DNL. So I guess, syempre, I guess we would try to protect our gains, especially at an uncertain time. So uh, I much of it I still held uh, up until now. Although I did buy back, especially during the panic, especially with our recommendations, yun nga, yung switch to DNL, because what we expect is they are positioned better in passing off the prices.
Okay, ayan. So, all right. So someone is actually messaging us that they cannot see the channel right now. So we'll just do some adjustment, and then we will continue. Next, Bess, how about you? What did you do?
Yeah. What I did on a personal level with my own portfolio, I actually parked more buying power in my account because although there is a lot of uncertainty, my horizon for my portfolio and my investments is very long because this is what I put in my account is mostly for it's is funds that I'm not going to use, and it's mostly for investments for what I will use or I will cash in on in many years from now. It's basically a retirement investment portfolio. So what I did was what cash that I did have, I added it back in anticipation some opportunities to to buy at a lower price. So I did a little of average down, but very averaging down, but very small amounts because of the higher risk in the market. Although hindi ko inubos yung buying power ko because I know there will still be other opportunities kasi hindi natin alam kung gaano tatagal itong conflict and the volatility in the market. So that's what I did. And yan, right now nakaabang lang.
Natawa si sir. Nakaabang. Okay, next is Isaiah, what did you do? Oh, wait. You're on mute.
So my personal capital is mostly fixed. So I decided to oh my gosh. So I decided to lighten on ICT. Atlas was relatively strong, so I shifted some capital to Atlas. I bought some Mac, which was eventually stopped out. So that's what I did for my own personal portfolio. I'm mostly cash now. So yeah.
Thank you. Yan. So sa mga nagtataka, galing yata siya sa Bahamas kaya ganyan. Medyo tan ngayon si Icy. Alright, next is Sir Nicky.
First of all, I just want to say na things like the war in Ukraine are hard to predict. Of course, there was tension leading up to the actual invasion, but there's still really no way for us to say whether or not it would happen. Even the Ukrainians themselves were surprised, and even so-called experts on Russian politics or on Russia itself were surprised that Ukraine was invaded. Um, it was really honestly it was a surprise that it happened. So for me, I really actually didn't do anything. I just sat on uh, my portfolio. Um, I guess my reasoning was that this is something that uh, will eventually come to pass. And given that I was happy with what I was holding, given that I was confident in what I had, then I saw no particular reason to react impulsively with what happened. And um, I guess the market has recovered since then, at least partially. So I'm still confident that over time uh, the market will recover, and the stocks in my portfolio will reach the targets that I have in mind.
Thank you, sir. Actually, we asked Sir Lawrence also. So there's a pre-recorded video and let me share this video what he answered when it comes to market corrections and bounces. Um, before that, sige, mamaya na lang kasi I think ina-upload pa nila. Sir Paul, what I think a lot of people are also wondering in terms of your reaction and behavior and management when during this time. Thank you, Sir Nikki, by the way.
Well, alam mo, with the length of my experience in seeing this market, nothing is new. It happens, no, and it will always happen. There will be situations which will catch us, surprise. Sorry. In reality, in life, since when I worked for the bank, I was mostly a trader. The first thing that crossed my mind is, wow, let me look at opportunities. Saan ba akong pwede pumasok to make an easy money. Because as we always say that the market moves in a pendulum. It doesn't go into the center. It will be too cheap or too expensive. So the first thing that I would do is, well, what's happening, which by the Ukraine war is a little bit more simple because there's tension building into it a few days, and the market has reacted, so to speak. Because people then are smarter and they went and say, what if a war happens? Ano mga apektuhan? No? So mostly we're finding out commodities because Ukraine actually is the breadbasket of Europe, so to speak, and then globally it provides what is number three in providing the basic commodities, like wheat and all this kind of stuff. Now, so the first thing I do is I say, look, where are the opportunity? Which segment are gonna do better, and which segment will not make a difference. And then based on that, I look at the price action that has occurred and say, ito pwedeng pasukan, because then the risk reward is, it's a logical move. But because I watch so many things, there are things that you cannot sell. I will not sell when I don't understand the reason or something to expect, because I always think that price movements will happen because there is a reason. So the first thing is actually be calm, because you don't know what the war is, how long it will last, ano maapektuhan. But if you had the chance to study that, then you can do whatever you need to do. If you need to cut a position because it's gonna be um, not as attractive. And if you can see, even the commodity linked issues that were listed didn't drop on day one. I mean, gradually dropped because then people understood, research reports that's coming out, and the focus is, commodity prices is going to be expensive. Oil will remain high. As it was already high, and then it will remain high. And then you see all the news that comes in. We don't know how long the war will last. People never thought it will last more than a month. As people expected Russia to just go over and conquer Ukraine, but it doesn't look like that so far. So I think the whole purpose of this roundtable is, number one, assess the situation. Look at opportunities in defensive position. As I hear some people say, some people cut, no? So they've done that. And if commodity prices are up and inflation is trending up, no? And we know that from what's happening in the US as well. Pero malayong gera sa atin, but it affects us in certain areas. And constantly look at that. Copper isn't gonna go anywhere. So nickel is people that predict nickel's volatility, but nickel price is still up. So metals, which has done very well last year, seem to be holding up as well. No? So that's something that So if you have a mining stock, you don't really panic. No? So the things you panic is if you're very strongly linked to commodities, and even at the, like the food sector, like the restaurant sector, other margins are gonna get hit, but hindi naman very quick that they adjust the price. And people don't really care if price go up, 2-3%. They don't feel that, But slowly, sometimes pain comes in over time. So like right now, transportation is because gasoline is higher, in the volatility you're seeing there. So anyway, what I did was, I will tell you, the first thing I always like when I see a situation like this is I look for opportunities. That is number one. I'm the optimist person. No? It doesn't mean that hindi ako nabapaso. Everybody's been burned before and everyone's made money. But people remember the times they made money. They forget the times they've lost money. So, and this whole roundtable today is to share with you, let's try and rationalize and analyze how we do and how we react. And so you've got a good set of 5 people here, plus Lawrence's recorded message. Everybody will now get a chance to answer your questions, and there's no wrong question. And oftentimes there's not even a right answer if you're going to predict something. So we hope everybody enjoys and learns something from this session, which is what we want to do this thing for. Thank you very much.
All right. So let's hear Sir Lawrence. I'll add him on from YouTube.
Well, anticipating market tops and bottoms are quite tricky, but there are some technical tools that one may use. For instance, I follow the daily and the weekly MACD and RSI. If I see a positive divergence or a negative divergence, then these are potential early warning signals that I look for. What is a positive divergence? A positive divergence means stock price is making new lows while the indicator is not making new low. So there's a divergence between the two, and vice versa. What is a negative divergence? It means prices are moving up, but the indicator is not following the stock price to new highs. So it means that there is non-confirmation of prices making new highs. So there's a potential that a correction might be imminent.
Yan, parang pang-break ng section si Sir si Sir Lawrence. All right, so I think people are all asking questions. But before mag-ipon muna tayo ng questions nila, I think another question that I want to ask at least three from the analyst and Sir Paul and Sir Nicky. When it comes to um, buying more in terms of lowering your average and cutting losses, how how do you choose from the two? Uh, are you gonna buy more, gonna average down, or are you gonna cut losses? Um, Best, sorry, nagturo.
I think it really depends on the stock that you're looking at. So if what's making the prices go down is not going to really affect the long term or even the near term outlook for the stock, and if it's not going to affect the actual reason why you bought into that stock in the first place, it could would be a good idea, I think, to average down. Um, but if it's a stock that is highly affected by the current situation and doesn't have any chance of recovering in in whatever time horizon that you are looking at, it's time to cut losses. And even without that situation, if you should already have as a level of parang meron ka ng level na set up before when you will cut losses, so you won't have to wait for big events like this one to 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 influence your decision, because that's when emotions come in. So that's going to be very um, hard for you if you're always driven by if you're only driven by by external factors that and you're not um, considering the rules that you set up for your portfolio in outside of those externalities.
Yan. Sige, let's take an answer from Rainier.
Um, so hi again, good afternoon. I guess my answer is, I don't know, somewhat, uh, especially in the challenging times. Na, I guess at times you would be bash if you're being too choosy, sorry, in other things. But I guess in these times, ito yung right time na maging choosy ka talaga. Especially when you're putting money into stocks. Uh, but personally, the way I see it, because my tendency is not to chase prices. So basically, I try to invest in stocks that I see value in. So I don't normally average up or average down, but instead I look at like what Sir Paul mentioned earlier, I look at opportunities. For example, the price action has been too low, or the support line is, I guess, near the 52-week low, or basta ano, parang the way we see it is it's really cheap na for it to go this low, especially if it's not being affected by the war. Like I guess one example of that is you have to read our short takes today if you want to know about that stock. So, and I guess what I'm trying to say is I prefer in choosing positions that we see value in, not necessarily because we want to, uh, not necessarily we want to put our positions or cost average lower, but we try to choose those that would provide value in the long run.
Okay. All right. So I think there is the dilemma, when are they gonna average down? And say for example, a stock that is part of the index. So there is a particular thing that we call bounce, after a big correction. So do you consider, like, while it's falling down, yung susunod na sasagot, while it's falling down, is it best, which one is the best action to do? Buy while it's dropping, or wait until it settles, then average down, or cut loss? Yan. Para at least, I think, mas specific. Um, Sir Paul?
There's no hard fast rule, and it depends on number one, gaano kalaki ang pocket, ang pocketbook mo. In other words, how much money you have. No, usually I would have in my mind an allocated amount for a particular stock. So, kunwari I'm holding about 80% or 70% of what I'm prepared to put in a particular issue, and then there's this opportunity. I'll take a real life example. Like, I'm a firm believer that Filipinos will travel. It's been said I like Cebu Pacific because I believe Filipinos will travel. I mean, for all of it, the whole world will travel again. In fact, people are opening up even those countries with still very high Omicron cases. No, but it's our second nature na we like to travel. Kahit na there is a oil price surcharge, we will still buy the ticket. So people will travel. It's just a matter of when, not whether it will or will not. No, so if you have that mindset na people will travel, Cebu Pacific will make money, whether it's this year or next year, he will make money at some point in time. And clearly, it's positioned to be the leading airline for the country, for all of. So ako, at a certain price, I will buy. And there were opportunities during this war crisis. A lot of people got gun shy, and so I'm buy and I hold. No? So maybe that's the point where I will say up to the limit of my investment, I will put it there and I wait. And that's what I have done with that particular issue. There are other issues that you look at to trade with a buy side bias. In other words, um, some blue chips, uh, very good blue chip stocks, especially now. No, I mean, it has gone up, but the bias is to go up some more. But in between, nothing moves on a straight line. No, so I'd like to buy, and then hope to trade it when it moves up. Example, SM Prime, for example, uh, has a 1 peso volatility um, in price range lately. So when that happens, ang bias ko is to buy, and then when it goes and then I put a sell order, then it hits my target. Masayang masaya ako. So that's my trading. So if we go specific, that's my style. So the question is, well, if you are fully loaded, if you loaded na, wala ka na pang hindi, I will not even call it average down. But in technical terms, you're really averaging down. But you see an opportunity to buy some more with money you don't need. No? Remember that, because if you're hoping that to buy dahil aakit yan, hindi mo alam if it will happen tomorrow or maybe next month or 3 months from now. Eh. Baka maipit ka dahil you need the money. I always say, buy stocks with money you don't need. And you should buy stock instead of keeping the money in the bank. To a certain extent, you keep some in the bank, and you should have a portfolio that you can, because um, dividend yields are quite reasonable compared to bank deposits. No? So that's what I did. No? So I looked at the stock. I don't remember now exactly what happened, but I'm sure I bought a lot of stock on that day, and I was looking at how much more money I have left. So that's what I did. But now, medyo, I think we've normalized it. The market has caught up. But yet, we're faced with reality that oil price is up, transportation segment is under stress. No, but good for us. Touch wood, our level of the COVID level is really low compared to other countries. No, sooner or later, I think domestically it will start increasing. Medyo marami pang takot, no, and I don't go out as well as often, but in time people will get more comfortable as they go, as less and less of this infection happen. So that only means we're all gonna travel, and that's gonna be great for one stock that I hold, which is the airline. So that's it.
Thanks,
I
sir.
hope I
How
answered
about
your
sir?
question.
Yes, sir, you did. How about sir? Sir, what do you do? Do you wait until it settles? Do you buy when it corrects, or do you cut loss?
I agree with Sir na I wouldn't actually call it averaging down. But to answer the question, no, whether it's falling or whether it has stabilized already, you have to look at the stock from the point of view of a risk reward ratio. So even if a stock has stabilized already, but if the risk reward ratio is not yet favorable, um, then you shouldn't buy. You still shouldn't buy the stock, even if it has stabilized. Always consider whether um, the stock still has further downside after it stabilizes, after it consolidates, um, and whether that downside is larger than the potential upside. So it it's really it really depends on the situation.
All right. Um, so let's move on to the uh, viewers' question. Please wag po kayong mahiyang magtanong. There are no right or wrong questions here, no dumb questions or smart questions. We will cater them as much as possible. From Lark, okay, he wants to have graphs for explanation. Sige, later we'll probably ask Isaiah to do that. Yung munang wala. Let's see. Given ito from Carlos Miguel Tayog. We're live in LinkedIn. So from LinkedIn, the question is, given the potential interest rate hikes, what are your thoughts on the banking sector moving forward?
Gina,
Who's
I'll take that.
okay,
And
sige.
then maybe Bess can add a little later. We're still overweight on the banks. Um, Although interest rates are rising, we believe that the the increase in interest rates won't be to such extent that it will significantly reduce demand for loans. And as we have seen in the past few months, loan growth for the banking sector as a whole has improved significantly from the lows of the pandemic, and we're actually looking at double-digit loan growth um, by the second half of this year. So if you combine higher interest rates with higher loan growth, then what we see is that the net interest margins and net interest income of banks are all going to significantly improve going forward. So we still like banks, and we still like, in particular, BDO and Metro Bank.
Best, any addition to that? What's your
Uh,
answer?
yeah, just would like to add that although the outlook for the sector is for the whole sector is positive, there are some banks that are able to take advantage of that positive outlook more than others. So specifically, if we would rather look at the banks that have lower NPL ratios or non-performing loans, because they are less burdened by those borrowers that are having trouble. So they would be able they wouldn't need to lessen their income by providing for possible loan losses. And also, um, um, we would like to look at banks that have higher net interest margins than other banks, because they're able to take advantage more of they will be able to take more advantage of the anticipated increase in yields. This would be more for the banks that have a higher percentage of consumer loans in their portfolio while having not so large NPL ratios. So that's why we prefer BDO and Metrobank than other larger than than the other large banks.
All right. Thank you, Bess. Next
Let
question.
me add. Let me add. Sorry,
Yes, sir, please.
I couldn't see the raising of hand here. Anyway, um,
There's none, sir.
what Nikki and Bess were saying, net interest margin, is actually the most important thing that you look at, aside from making sure that the bank ratios are good. No? Remember, pag tumataas ang interest, overall, the margins or the spread that the banks are going to charge the borrower becomes higher and higher in absolute numbers. In other words, what the bank looks at is, they have free money, well, almost free money after, before reserves, like checking accounts, and they were paying saving accounts of what, less than 1%. Whether interest rates are low or high, those money will be very stable, will be very, very stable. Then you have the more expensive money that they go to the market. But overall, the bank has a average cost of money. Now, the most interesting about the bank is if interest rates go up, let's say at one point in time it was, let's say, 15%. The bank's not making 1%. The bank's making a few percent more than that. As against when today, or before, before the interest rates are higher, banks actually make a little bit less, a lot less in terms of net interest margin. Nikki, what's the net interest rate margin that the big banks are having? I can't hear you.
Sir, I think you're on mute.
Sir, si Best would have a better idea.
The big three banks are hovering at around 3.4% net
Okay,
interest
okay,
margin. I think Metrobank even has 4%.
okay. That's great. See, example is, for you to have a 4% margin, your average loan rate must be around 6.5 to 7.5%. Generally among your sector of of good borrowers. But siguro average baka mas mataas because people buying, real estate, consumer housing, mas mataas ang binabayaran nila. But it tells you their average cost is around what, 3-4%. No? So when interest rates shoot up to, let's say, 12-15%, their cost will obviously go up, but the loan rate will go up faster. I mean, I've seen that in my life. So keep remembering, when interest rates go up, good banks make a lot more money. Of course, the not so healthy banks with a lot of problem accounts, are in a worse off position because their cost becomes higher and their customers are not paying them. These are the non-performing loans. So we hope we've given you the answer, Carlos. Thank you.
Thank you, sir. Thank you, Carlos, for your question. Next, we move on to from Facebook users, or this is from one of our Facebook groups. Any insights with LTG and Tech? Sir,
Can
are
you
you?
repeat that?
Yeah. Any insights with LTG and Tech?
On LTG first, um, the company just recently reported earnings, no? And it was distorted kasi by the large one-offs for PNB. But what's important to note, at least for me, is that LTG actually increased its dividend payout by 20 or 25%. And that is in line with our investment thesis for LTG. And that is that the stock is going to continue to be able to give out significant dividends. Its yield will remain high. So, as I was saying earlier, from a risk reward perspective, we see little downside for LTG at the moment. It's already trading at below 4 times PE, which is the lowest among the index stocks. And its yield is actually higher than its PE. So, um, yun nga, for me, there's little downside at the moment for LTG, and we remain a buy on the stock. For tech, we're still waiting for full year numbers. The third quarter numbers kasi were disappointing, to say the least. And we're waiting for the fourth quarter numbers, and we will see if we need to change our outlook for the stock on that one. But as I have said before, and this applies not only to tech but to the other um, semicon manufacturing companies, the war in Ukraine has a particular effect on the semiconductor industry because Ukraine apparently supplies 90% of the world's neon gas. So it's a very niche market, no? And neon gas is important in the manufacturing process for semiconductors, specifically the lasers. Uh, you you can't use lasers in the etching of the semiconductors unless you have neon. So this could affect the industry moving forward, but um, that is just a threat right now. What we see is that there is still supply, and so we're hoping that the war won't last more than a few months. But if it does, then it could have significant effect on the semiconductor industry.
Thank you, sir. So it's also the reason why IMI also is correcting. Is that connected to that as well? Or
Yeah.
all right. Next question from Justin Palino. What is your take on SMC price movement and its market value at the moment?
Um, Honestly, we haven't really taken a look at San Miguel closely for some time. And it's not unique to us. No? If you look at uh, or if you have access to Bloomberg, you will see that no house or no analyst currently covers San Miguel. And in fact, it is one of the largest companies in the region that doesn't have any analyst coverage. And this is because um, the company's disclosures are not very detailed. There's uh, there's a lot of room for improvement when it comes to how much information they give to the market. They're basically their disclosures are broad strokes, and what I've been saying for some time is that the initial earnings disclosure of San Miguel give paints a different picture compared to what we see when they finally release the actual financial statements for a quarter or for the year. So maybe that's why a lot of, or actually most analysts have dropped San Miguel from their coverage because there's no visibility. There's a lot of room for improvement with regards to transparency for the stock.
Thank you, sir. Let's move on to the next question from John Kevin De La Vega. I hope he's not mad. Okay. So I think the dividend declaration, all caps kasi. Okay. Why does it keep on going down? I think this was addressed by Sir Nicky a while ago. How many percent is the dividend yield of LTG?
I think it's 9% or 10% currently. One of
So
the highest in the market.
So that's a good thing with dividend stocks. Even if it's correcting, you still have the dividends into play. Next question from Sibayao. Will there be a focus of the day on 80 in an, in an upcoming short takes? Pwede ba
Uh,
to?
we'll have to see. We usually choose um, the stock that we want to focus on depending on whether or not there's significant um news or significant developments on that particular company. So for Atlas, the company just recently announced full year results, and we discussed that already. So I think the earliest that we would probably look at that again is when first quarter numbers come out, and that will probably be around May, unless there's a huge movement in the price of copper, or if there are any other significant corporate actions that happen between now and then.
Right. Thank you, sir. Okay. For just to give a break for our um, people here, the mentors here, I'll share with you the question, the second question, the answer of Sir Lawrence, whether he will cut loss or average down. Let's watch.
I believe in cutting losses because I've seen a few boom and bust cycle through these years. I've seen the Asian financial crisis 1997 and another great financial crisis in 2008. From the peak to the bottom, several good companies dropped by more than 90%. We're talking about big, solid companies, blue chips, that also suffered together with the entire market despite their solid fundamentals. I follow what a market wizard, William O'Neill, believes in. He believes in cutting losses at 7%. So for For me, 5% cut loss or 7% cut loss is reasonable. Why? Because for a 10% loss, you need to make 11% return to make up for that 10% loss. So still manageable, but if you let your losses run to 50%, for example, your portfolio is 10 million and you drop to 5 million, you need to double your portfolio to get back to that high water mark of 10 million. Whereas from 10 million, you drop to 9 million, you cut your losses. And a 10-11% return will bring you back up easily to your 10 million high water mark. Some of the companies that I remember, there's this big major bank that dropped from 90 pesos all the way to 20 pesos in a few months' time during the crisis. So these are some of the volatility that one should be able to stomach if one decides that his trading strategy is never to take a loss.
Sabi ni Sir Lawrence, 5 to 7%, or if not, you should have a stock. You can stomach the correction. And next, we move on to the next question. Um, okay. The question with regards to a Marge playlist, we'll just address you. Uh, we'll just address the participant. I saw here a question about on pause, a stock on pause, which has a buy rating on Shortex. Remember that we have certain parameters with our March playlist. It's more conservative than our regular coverage and rating. So that's the reason why. So just with regards to those parameters, if it goes to that parameter, then we will put a pause or a stop on it. Ayan. From Albert, Uy, how do you see inflation affecting the local stock market? What sectors will be the winners, losers? Will commodity producing stocks fare better? Sir, on mute.
I keep forgetting my mic is on mute.
Sir, don't mute it. Ako na lang.
Okay, sige. I will give an answer and then maybe Rainier can add to this because it affects the consumer sector. We saw inflation run up in 2018, and the market was relatively resilient at the time. This year we're looking at inflation hitting maybe 5% later this year, which is lower than what happened in 2018. So for me, given what we're seeing right now, on the broader market, I don't think that it should significantly impact the index. I see more impact on individual names. And in particular, what we've said before is that consumer discretionary stocks should be uh, should be affected, should have some headwinds, and in particular the restaurant companies, because they're getting hit on two sides, both the demand and on the cost side. So uh, people who are eating out often might think that, or might decide that they will eat more at home because it's becoming too expensive. So the demand is likely to slow down for restaurant stocks in particular. And on the cost side, they're also being affected by higher commodity prices. So top line is affected, margins are affected, are and this will have a significant effect on their bottom line. Um, with regard to winners, I think the only one that we can point out again is still the banks, because higher inflation will continue to drive local interest rates higher, and as we explained already earlier, higher interest rates should redound to higher net interest margins for the banks.
Um, Anything to add, Rainier, on consumer sector?
So apart from what Sir Nicky said, I guess we wouldn't call it as winners, but there are stocks that are less affected when it comes to inflation, particularly on these commodity spikes. So parang what we've been saying is parang we would like to shift our focus to more of the retailers, because they are less affected when it comes to these types of spikes, no. So like what we mentioned, I guess more on the pure gold, since sila talaga ano, parang they even have the power, or well, parang they can manage their margins better compared to like what Sir mentioned on the restaurants. And then I think the last question is yung the commodity producing stocks. Uh, uh, I'm not so sure if there are many, or if there are, they're very little. So we would we don't have any coverage, if ever, because these stocks are rather small and illiquid.
All right. How about decision on the banking sector, Beth, for the winners, as mentioned by Sir Nikki? Anything to add?
I think it's been adequately discussed now, but it's our previous questions.
Okay. Then we have a question. I also saw another question from the audience about ASEX. Um, so first we will discuss the fundamental, and then we'll ask the technicals of ASEX. Sir, will you recommend buy on ASEX FOO?
Um, Apologies, but actually we don't have coverage on ACX. Um, it's For me, it's relatively speculative, and it's really difficult to pin down if it's too speculative, like what we see, or like what I see for ACX. There's really um, very little that you can hang your hat on when it comes to determining the fair value for the stock. So we probably won't even issue a recommendation with regard to the follow-on offering of the company.
Thank you, sir. So given that we don't have the fundamental coverage, can we ask Isaiah for its technical view?
Have to share at the stream. So this is the chart of ASEX. Um, the recent selling has been aggressive, so it broke the long-term uptrend, broke the 200-day. It's definitely a sell, as sellers are very aggressive. So it looks like an avoid sell. So one shot.
Thank you, because I think a lot of I see some questions if it will bounce soon because it corrected. So thank you for that. Let's move on to the next question. All right, from Noise Finest, which specific ratios and financial numbers do our analysts use to indicate undervalued stocks and their intrinsic values?
Um, for me, there's no specific ratio or financial data, financial numbers that I personally use to determine whether a stock is undervalued or to determine whether or not the risk reward ratio is favorable. For me, valuations will always be relative. Um, it's either relative to a company's peers in the local market. For example, comparing Jollibee to other restaurant stocks, or it's relative when you compare local company to its peers in the region or to the emerging markets universe as a whole. Um, it is even possible to check whether a company's valuations is undervalued with regard to itself, whether it is trading at a discount to its historical valuations. Like, for example, Pure Gold, we recently showed that the company is or was trading at its lowest ever forward PE ratio. So, again, for me, valuations and the resulting risk reward ratio are relative. So you have to first you have to take into consideration the outlook for the stock, whether it's favorable moving forward. um, Once you figure that out, once you determine that it is favorable, then you have to check the risk reward ratio. And for me, that's comparing it to its peers, domestic or regional, and then looking at its historical valuations to see if there's significant upside.
All right, sir. Thank you. Um, let's move on to the next question. We have 12 minutes to go. So let me see. Okay. About from Anna Pernites. My question is to Sir Nicky and Harman. What's your view on SPNEC's block sale and stocks outlook, please? Thank you.
Um, with regard to the outlook, it's still the same. SPNEC is a very young company. It just listed in December. We're all looking forward to the actual share swap, which should happen by the second quarter of this year. Um, by then, given its current share price, the company would easily be a $1 billion company by market value already, and that will give the company a lot of visibility, not just for domestic institutional investors, but even for foreign funds, because a lot of times foreign funds will use a market cap screen um, to determine whether or not a stock is going to be a fit for their portfolio. So right now, with a very small market cap, SPNEC simply doesn't appear in the radar of foreign investors. Um, and then aside from that, we do believe that there is a lot of growth in the industry. We believe in the specific positioning of the company within the renewable energy space. And that is, as in management's own words now, they are a renewable energy developer. so that is their specific strength, bringing massive solar projects from conceptualization to becoming shovel ready, and then eventually building that up together with a large partner, say Prime Infra or Aboitiz or even AC Energy. So actually, the company doesn't see itself as competing against these large firms, but rather working with them so that the Philippines will be able to transition smoothly and as quickly as possible from fossil fuels to renewable energy. But with regard to the block sale itself, we don't know the particulars of that one. We can't um, we can't say how it will um, specifically affect the share price, but assuming that it was taken by assuming that the block was taken by an institutional investor, then that should give um, market participants greater confidence in the stock.
And do you want to add more, Herman? Okay.
All right. Thank you for the question. I'm not sure if the client is referring to the upcoming share swap when she said block sale. So
Herman,
assuming
I think it was in reference to yesterday's block sale of 210 million shares at 171.
oh okay. All right. Siguro when it comes to the outlook, actually we held a Wink event last Friday just to discuss the company's outlook. Siguro very briefly lang, we said there that the upcoming share swap is a game changer. So when we initially came up with our target price of 1.96 before the company listed, the share swap was actually not yet in the table. And with this upcoming share swap, the capacity of SPNEC will actually multiply by 20 times. So one can imagine by how much our target price will also grow into. So if in one of the latest disclosures by the company, management was targeting a fair value of 15 million pesos per megawatt. So I think that roughly translates to around 4 pesos by around 2025. So as we said in the Wink event, there is still a lot of moving parts that can move the valuation in either direction. But we think one thing's for sure, that our new target price will definitely be higher than the current market price. So this implies that SPNEC is really a good long-term play.
All right. So let's move on to the next. From William, how is the property sector affected with the varying market condition due to the current geopolitical event?
Okay, I'll start off, and then again, Herman might want to add. Um, the property sector is only broadly affected. Um, the overall market sentiment, of course, is or has been negatively affected, and that applies to property companies as well. But um, there are no specific um, there are no specific negatives for the property sector. Only probably just secondary effects, no? Like for example, Russia is also a large producer of steel and nickel, which might impact the prices of construction materials. But those should be, those should be manageable for the industry. What we have been saying is that the biggest factor in our view for the property sector is the uh, huge amount of vacancies for the office segment, and that we believe is going to take quite a while before it is absorbed, because we don't think that pogos are coming back, and um, the fact is that property companies are still completing projects that were started before the pandemic. So there's still a lot of new supply that's coming in, and then demand is relatively weak. So property consulting companies like Colliers have said that they expect office vacancies to continue to rise through the end of this year, and that is why we remain underweight on the sector.
All right. Thank you, sir. So we have one last question, and then we'll go on to the last tip from Sir Nicky and the final words from Sir Paul. Um, let's see. Let's have okay. Eto. What can you advise if a blue chip stock is already 39% down?
Um, any particular company? Because
Any of
like I
oo.
said, um, whether or not or whatever you decide, um, whether to buy or even when you sell, it's it's really a matter of perspective when it comes to the uh, risk reward ratio. So it is difficult when a stock is down 39%, but the focus should be whether or not um, you think that the stock will be able to recover that loss, or whether the downside is still um, quite large. So um, just take it from that perspective, and uh, if the downside is already low, and if the future looks positive for that stock, then um, I just hold on to the stock and maybe even add to that stock if it's possible with regard to the portfolio size, because it's not it's also not just no it's also not just the risk reward ratio, but with regard to the size of that particular holding in the context of your overall portfolio. Um, as we say, don't put all your eggs in one basket. So um, if uh, if if that stock is already occupying a large percentage of your portfolio, then um, you should also consider that.
Sir Paul, an additional?
My closing words are what the purpose of this roundtable is. I want to tell all the people that follow us and customers who have account with us. Keep in mind, whether the market is good or the market is not so good. We are here now. So if you will have questions, don't just keep it to yourself. Ask our research team. We have a web Facebook pages, and you're free to ask the questions, and we will respond to that as soon as we see it. No, I mean, I see Herman and Rainer and I say are quite active in it. No, and everybody will make it a point that we give you our thoughts. We're not perfect. We're not God, but we try to give you a reply that is not premised on pure guess. No, even on the charts, you still have history to look for, no, before you give your prediction for the future. So, um, I think that's really the message I want to say. You will have questions, whether it's a good time or bad. Keep us in your mind if you need to have somebody clarify some questions that you have, and that's what we're here for, and that's why we call you our partners, because we want you to know we're always around. Okay, thank you very much. uh, I hope there's enough that went around, and I'm sure a lot of questions remain answered. We will get back to the questions that remain unanswered. No, China will make sure of that. Thank you very much.
Thank you, sir. Sir Nikki, final tip for our viewers today. I think probably when it comes to handling their portfolio, and I believe there's much that has something to do with the emotional cycle also of investing. What can you give as an advice to those who are watching us that is like contemplating if they're gonna add, if they're gonna enter, if they're gonna stay in the course? And then, sir, you have to unmute so we can hear
Like
you.
I said, I keep forgetting the time limit. Um, I was saying that I'd like to go back to what we were talking about at the start of this event, and that's um, it's really hard to um predict when a significant negative event is going to happen. Basically, nobody knows, and that's why they're called black swans. No, they're very, very rare, and there's no point in actually trying to predict them. You can only um, prepare yourself by choosing the right stocks. Uh, and when I say the right stocks, these are companies that you should be comfortable holding for the long term, even if they fall 20, 30 percent or even more. And I also mentioned earlier that your position sizing um, should be well proportioned. No? You don't invest too heavily in one particular stock, so much so that it will drag down your portfolio if it falls significantly. And then um, remember that if you choose the right stocks, um, if you stick to companies with good fundamentals and companies that have long-term uh, upside potential, then whatever happens with the market, then you will have a significant degree of confidence that your portfolio will eventually come back, will eventually outperform any other investment class. We like to say that equities um, are 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 the best performing asset class when compared to bonds, real estate, or other assets. No, and that is true. But you still have to you still have to choose wisely. You still have to choose the correct stocks.
All right. Thank you, Sir Nikki. See you next live. All right. So for those who have been watching us and just tuned in, this is the round table. This is our Q&A segment with our coaches and mentors here in the market. If bitten kayo, make sure that if you are a MyTrade subscriber, that you are a member of MyTrade Map. This is our portal for our SMEs, our subject matter expert, where you can ask questions, post questions there, and they'll be answering it. I'm thinking of answering. Do you want to answer the some of the questions technicals, or we'll just post it? And no. Final. All right. But yeah. So we will just to address because Sir Nicky and Sir Paul have to go, but just to address a bit of the questions. I think they're asking about keeper. Let's take the fundamental first of keeper. Any updates, Rainier, and then we'll go on to the technical view.
For keeper, the outlook remains remains the same. So basically, the drivers for keeper remains to be intact, especially with the economy reopening. So keeper kasi marami sa mga products nila, they're more of consumed like sa restaurants, sa bars. Basically, they're on-premise drinks. So what we're seeing is volumes for those products will start to recover, and sales will improve moving forward. And we're still seeing growth in terms of their market share and bottom line for 2022. Although we're as far as I know, or our last update from the company is apart from they're not directly impacted per se
I think we're
because they don't have production as of the moment, but they're experiencing some logistical concerns when it comes to ayun, importing them into the Philippines. But they mentioned that it is it's not something new that the
I
company
think
has experienced that, and they
Rainier
have
is lagging. Rainier, we didn't hear the last part he said. Medyo naglag ka.
what was the last part? Sorry, Gina.
Um, Logistical issues, concerns.
Ayun, and so the company is experiencing some logistical issues when it comes to importing them into the Philippines. But the company mentioned that I guess they've grown accustomed to this, and it's not something new that they experience this, especially as importers. Um, and we're just waiting for the full year results that should come in in the next couple of weeks, and we'll see
Okay.
more color into that.
More color. Okay. Sige. How about the technical view?
So for the technicals on Keeper, it's just been range bound. It's pretty much just been range bound between 115 and 140. So if you're more of a trend follower, you'd want to see this trade back above the 50-day MA to gain some momentum. If you're say more of an investor, now is a good level to purchase some since it's near the 120, 115 support level. So yeah, for Keeper.
Okay. We'll try to answer some of the questions that were left here. Um, okay, we'll wait for Best to return. For the meantime, we'll check on how about all day? Is it safe to re-enter all day? I think it's asking for a technical view.
This I think I posted this to map all day. Still trading in this channel. It hit resistance. So in technicals, as long as it remains the trend is intact, the assumption is that it will continue until it's proven otherwise. So for this to start to reverse, you'd have to break above this resistance line. Until it finds support above the resistance line, it's assumed that it will continue to stay down. So it's still in a void until it breaks above the downtrend line.
Thank you. Is this part of your coverage, Rainier, all day?
Yeah,
Have you
all
changed
day.
RVBC
So
or no naman?
for all day, we're still a buy, especially with earnings coming out earlier today. Uh, I guess from our view, their growth drivers remain intact. This is on their store network expansion plan, and they've been aggressive at that pace. Tapos, in terms of bottom line, the 2021 earnings, they were better than what we expected. So, and like what we mentioned earlier, these retailers, they're the ones less affected when it comes to consumers from these commodity spikes. So we expect 2022 for their growth performance to remain strong.
All
So
right.
we're still a
So
buy
if
on
I'm
all day.
okay, so if I'm an investor, I think guys, it's if technically it's still on that channel, it's going down. I think the best way to marry both analysis is that it's a buy fundamentally. So what you have to do is just to wait for the proper timing where the channel breaks. Siguro that's how I'm gonna marry both analysis together if I'm the investor. So I think it's one way of you mixing that both calls together. Um, let's move to okay, insight. Pwede na ba to with SM and Ayala Land? Mm. Ano, fundamental muna or technical?
Maybe I can take Ali.
Okay. Sige, Ali.
So
You're mine.
yeah, so Ali recorded some growth year on year for 2021 earnings. However, if you compare this to pre-pandemic levels, it is still way off. It's just around 65% of 2019 levels. So this tells you that Ayala Land and the property sector as a whole is still a long way to go from returning to normalcy. So in this case, since Ali has more exposure to the offices, will we still prefer exposure to SMPH and RLC because we think malls are in a better position to weather the current business environment due to more improved mobility brought about by relaxed quarantine restrictions. So we prefer exposure to companies that have a huge portfolio in malls. So we prefer SMPH and RLC for the property sector.
Okay. Let's hear from the technical view of Ali.
Ba yun? Wait, check ko lang. Ireland. So Ireland, quite easy to chart since it's just in the trading range. It's on the lower end of the support line. So basically just buy support, try to sell at resistance. Um, SM, SM din ba? SM is more bearish looking since the channel is descending. It's closer to oversold at siguro 8, ano ba to? 800, 833. Um, since the channel is descending, we'd want to look to sell on strength though. So you try to sell on strength for SM.
Okay, let's move to any insights on GMA 7. Can we take this? Do you already have an idea on the dividend per share?
Um, I don't think we can give an exact or give any estimates for the dividends per share that GMA will declare in future. Although this is still a dividend play, as um, uh, the payout has increased in the past few months to years, and as long as there is no significant competitor to GMA7, this is the advantage of its advantage in the market is likely to continue. The thing is, after the elections, we don't know what will happen yet, in terms of whether someone gets elected that is more favorable to renewing the franchise of other media networks, not necessarily the one that was um, not renewed a few years ago. So that's a big uh, uncertainty that's hanging, that's still to come, in terms of whether GMA can hold on to its advantage in the market. So, um, but still, GMA is still going to benefit from the election advertisements that will still come in this year. So that will reflect on their net income this year, and then will probably reflect on their dividends next year, because
Thank you, Bess.
it's parang medyo may delay kasi it's previous year's
Yeah.
net income usually in dividend. So that's still dividend play, but also you have to keep in mind that we don't know yet what will be the result of the elections and how JMA will be able to keep its advantage, being the main the big player in the sector right now. And also you also have to keep in mind the long term trends that happening in the media sector, in terms of most viewers going to digital, and the share of the audience share of traditional platforms such as TV, radio is declining, in favor of online content. Um, a lot of advertisers are moving a lot of their budgets for marketing towards um, the newer platforms such as YouTube, Facebook, even some news sites that we don't know yet what that kind of websites that will take away the viewers from the more traditional um, media delivery systems.
Thank you, Bess. Um, all right. We still have, I think we can take this question from Harvey Chua. Keen to know speakers' insights on SM FTSE rebalancing that looks like it's still ongoing with Mandarin still trying to sell.
Yeah,
Can you
actually,
give a comment
earlier
on
there
that?
was a question on SM na hindi ata
Ah, okay.
address yung fundamental. Maybe Rainier can discuss some of the fundamental. But for SM being removed from the FTSE indices, we had expected that most of the price action based on this development would happen before the implementation date last Monday. But apparently, not all of the funds have been or not all of the institutional funds that follow or track the indices been were able to parang humabol on that deadline. So there are still some who are, I don't know if how long it will, or it'll wane. It'll probably wane as the days go forward, because these funds will be minimizing the tracking error. So the effect of the FTSE deletion will wane probably in the next few days or even weeks. But if it has not gone completely to zero already, I think most of the selling on on SM um, is related to it being the biggest, or having the biggest weight in the PSE index, and this is the most visible to foreign investors, and for especially the foreign institutional investors that are moving away from emerging markets, especially as the U.S. Federal Reserve has started their tightening, or the increase in their benchmark rate. So that's one of
Mhm.
the, since it is has the largest weight in the index, it has the biggest to um, sort of parang biggest disadvantage in terms of foreign funds taking away their investments as a whole, and not necessarily on specific, just on specific stocks on the emerging markets.
Thank you, Bess. There's a question here. Converge, please. So, merong phone in comment here na binili na ng Alaska franchise sa PBA. So, magkakaroon na ng PBA team si Converge. But while, how about, do you have a fundamental view on this?
Yes. Okay, I just saw the news just now. Still hard to ascertain how that will impact the company, but focusing on its core operations, we actually wrote about Converge in our short takes dated March 18. So that was last week. So as we wrote there, we still expect Converge to continue its growth trajectory this year, though we might see some material slowdown, as we've discussed in that write-up, due to growing competition from PLDT and some employees going back to their offices. But even if we temper our growth projections for Converge, we still arrive at a target price of around 34 pesos. So that still presents some generous upside from its last closing price. But despite that, we still want to remind interested clients of some caveats. First, Converge recently suffered a data breach. So even if management assured that that issue has already been addressed, it might leave a bad taste in the mouth of some investors and clients alike. So very briefly, a random individual tried to access the personal information of some clients in the Go Fiber app. So that constitutes a data breach. So, but the company reassured the market that the issue has already been addressed. And then second, Warburg Pincus, one of the company's major shareholders, is still holding 770 million Converge shares. So just want to remind everyone that their average cost is around 5 pesos per share. So it is very profitable for them to sell their shares anytime. So the last time Warburg chose to sell down their Converge shares was around, I think, November last year, wherein Converge saw a correction from around 44 pesos down to 28. So you can see the huge impact that the sell down can cause on the stock. So in some, despite the huge potential upside of Converge, interested clients should still manage their exposure because of these risks.
Okay. Tapos na ba yun? Sige. Are you done, Herman? Sorry, kala ko nag-stop lang yung sound. Alright, so ikaw na rin naman 'to. So, let's have a question about REITs in general. Any take?
Okay, so we also talked about this in our short takes, but very briefly lang. Yung REITs natin REITs in general are very vulnerable to interest rate hikes. So if interest rates rise, share prices of REITs should go down so that their yields will remain competitive. And as we discussed in today's short takes, the hawkish tone from the Fed is signaling some rate hikes in the middle of this year, which might also influence the decision of the BSP in terms of moving the interest rates. So if this pushes through, this will cause some pressure in domestic REITs. And also, we also brought up that our domestic REITs offer the lowest premium over the risk-free rate compared to our regional peers. So that makes us more vulnerable again to interest rate hikes. So we're not very bullish on REITs right now uh, because of Fed's attitude when it comes to raising interest rates. But if one really wants to gain some exposure in REITs, we still prefer C-REIT as our top pick because of its yield leadership and its exposure to renewables.
Okay. Thank you. Um, sige. Ang daming nagtatanong kung kailan matapos na tayo. Sige, ito na lang. Last na to. What's your take on agriculture-related stocks? I don't know if SPNEC is an agriculture-related stock and our take in RASLAG. Meron na ba tayong coverage on RASLAG? Have we checked on this? If we're subscribed or not?
Okay, I don't know if these two questions are really related, no? Siguro I'll focus na lang on the second one, si SPNEC and RASLAG. What's very interesting with RASLAG is that some of it already has an operating solar plant, and these two plants are benefiting from FIT. So the rates that they are receiving from the market are much higher than the spot prices. So that makes their operating plants very profitable. However, we believe that its a preliminary offer price is quite expensive. So I think if I'm not mistaken, their preliminary offer price is around 2 pesos. So we'd rather we prefer that there'll be a significant reduction in the preliminary offer price in order for us to reconsider subscribing to the IPO. And then for SPNEC, siguro if you compare Raslag's capacity to SPNEC post share swap, sobrang liit ni Raslag compared to SPNEC. So si SPNEC has a pipeline of around 10,000, but si Raslag, I think ang pipeline niya lang for the next 5 years is around 250. So I think that's less than 1%.
That's
Sorry, mga siguro 2.5%. Ayan. So very small lang si Raslag. Very small lang si Raslag compared to SPNEC. So if we'll choose between the two, we still prefer SPNEC as of the moment.
okay. Ayan. Sige na, huling tawad. We want to go on and continue this, but last question, and then we will share with you the last video of Sir Lawrence regarding the PSEI index before they give their siguro final tip na lang that you can apply later on. But we have there's a question about FCG. So first is we can give our technical view on FCG, and then later on we'll ask Rainier for its fundamentals.
G is attempting to make a reversal here. You can see it broke out of this downtrend line after breaking the support at about 80 cents. So if you can break above this neckline here at 61 cents, you can make a run towards the next resistance here, which is a pivot point at 74 cents. That's a move of about 21%. So if it breaks out here about 20-day MA, with volume, I think you can get a trade there for about 20%, for a 20% move. For FCG.
For Rainier.
Okay, so for the fundamental side of things, we still continue to like FCG, even if it's one of the restaurants that I guess we mentioned earlier that will be decently be affected because of the commodity spikes. But as we mentioned before, like during the IPO, we expect FCG to be the least affected, especially with gross margins being much higher compared to its competitors. So during the time of the pandemic, these companies were grappling in terms of profitability, but at that time, FCG was at their growth stages, so they were earning a lot and they were growing a lot during that period. And moving forward, we're expecting more of the same, especially with their plans to further expand their reach and the number of stores that they have especially for Angel's Pizza. So we're still a buy on FCG.
Okay. So, as mentioned by Isaiah a while ago, there is a reversal coming in or it's starting for FCG, and we are also still a buy on the stock. So probably can marry both together and can have a good re-entry or lower your average cost. I think all right, that's it. And then let's share the insight of Sir Lawrence with regards to the index.
And for the final question, what is the bigger trading range for the market? If I look at the weekly chart, I would say that 7,700 points is a very heavy resistance for the market. In fact, recently we went up almost to 7,700, but the rally fizzled out. There was a huge resistance at that level, and the market was not able to overcome that level. And looking at the downside, if we break 6.9, then we could possibly be looking at 6,200 plus. On the weekly chart, that's a lower end of the trading range. So right now we're at 6.9. We have a resistance at 7.7 and a downside at 6.2. So we're almost practically right in the middle. So this is really a juncture that it's quite hard to decide. Should I sell now or should I wait for higher prices? But running the risk of market going down to 6,200 plus. It's quite hard to decide right now because we're right in the middle of the trading range. Yan.
All right, so we're in the middle though of the trading range. Okay, final tip for our coaches this afternoon, so we can wrap this up. And also, congratulations to Carlo Miguel Tayag, Albert Uy, Ronald Avila, John Kevin De La Vega, Rainier, ko ba to, Rainier? Conrad Aspirin, and ayan, forgetting my trade calendars, ayan, minomodel ni Best. That's a table calendar, and also they'll be given a flip calendar. So if I think it's gonna be you can use that in your business to write down the schedule. Ayan, ito naman si Herman is holding the flip calendar. Ayan. So we'll be sending it to you. Please send us your shipping address. DM us. The DM link is in the comment section in your whatever channel you're watching us from. All right. So final tip, coaches. Let's start with Rainier being the newest in the market. What's your take with
I guess
regards to what you have heard from Sir Paul and Sir Nicky?
my take is I guess uh parang how do I put this? I guess what I want to try to say to our fellow investors is try to keep updated, especially with what's happening today, especially with the news on the war, especially on the war, on the inflation, on the oil prices. Try to keep track of them, para you get some sort of idea of what's happening now, and continue on to I guess read apart from our short takes, because in our short takes naman parang we try to update our clients of what's happening and our view to it. So apart from that, parang even the articles that we see on social media, parang everything, if we try to piece them up all together, it provides us a bigger picture on what's happening today, and it provides us insights whether uh, the market that we're seeing now is turning out for the better, or is it improving, or is it going sideways, or is it parang is that sentiment further going down. So parang ano, especially for those who are active in the market today, or parang just try to keep updated, just so parang you would know what to expect moving forward.
Thanks, Rainier. How about Herman?
Yeah, in connection to what Rainier said about always being updated, siguro one of my key takeaways is from what Sir Paul said earlier, that it's always a learning process when it comes to the stock market. What one cannot say that he has already learned everything, and that um, parang there's no room for a person to take any losses. Even I think even the most learned among all of us still encounter some losses. So yeah, so for as to reiterate my key takeaway, there's always something new to learn every day. So always keep growing. And so there, I think humility also plays a large role in this, because if we are humble, we are acknowledging that there is always something that we can learn from other people and from the market itself. So that's all from me.
Thanks, Herman. Sino ba sa inyo dalawa? Isaiah.
I guess the thing I would like to impart is to make sure that you're trading long-term money, so that if there is a crash, you're an investor. It's not, you won't get shaken out easily. The other thing is to try to remain disciplined. I think it helps if you're a disciplined person. It carries towards being a disciplined investor and a trader. So, yeah.
Tsaka
And Beth.
mag-sunscreen, no, Isaiah.
Tama yan.
And next, Beth.
Um, what really stood out to me today was when Sir Lawrence mentioned that his cut loss is 5%, only 5% to 7%, because sometimes in just one day or even less than a day, kahit wala pang recess, a stock could go down by that much. So you really have to decide beforehand or before these type of black swan events happen, what kind or how deep of a risk or a loss you are willing to take before you cut loss, and that will depend on it can depend on your own risk appetite. It can depend on the size of your portfolio. It can depend on what type of stocks are in your portfolio. So you really have to look at your portfolio from that perspective. And so you always have to be mindful of your allocations, be mindful of the cash that you currently have. If if this is something that you will need in the near future, or if this is something that you are comfortable letting sit or in a specific stock for a long time, if the horizon for that stock is long term. You also have to keep in mind, keep your emotions in check, especially during these types of volatility. So one one way to do that, I guess, is is to maybe take a break when things are going very unpredictably. So
Yeah, and so I
gather
guess
yourself.
ayan. So I hope that you have learned from our coaches this afternoon. One thing for sure, we will not let you be alone in this course, and we will make sure that we are guiding you and also sharing our best experience, our best practices, our experiences, to let you know that you it's normal to feel that way, and it as market is cyclical, those seasons are also natural. As far as Sir Paul is saying that he's seen a lot in this market, and just continue to be optimistic. I mean, sabi nga nila, the show must go on, life must go on. So you have just to stay in your course, make sure that you're not putting funds na that you'll be wary about. That's why when it comes to the time horizon, always remember it's for the long term, para yung mga trading plans mo in accordance to your objective. All right? So thank you so much, and I hope you have a great afternoon and keep safe, guys, wherever you are. Bye.